Welcome to everyone to this final session of the OECD's Blockchain Policy Forum, which is our roundtable on building blocks for a Web3 world, integrity, trust, and responsibility. So Web3 is a shorthand term, I think, for an emerging ecosystem of markets and governance structures and business models and products even that are often defined through features of decentralization and new digital representations of value, or different types of decentralization, I should say, because of course the internet today is quite decentralized. But these features are also being considered as foundational elements of the metaverse, which is a collection of immersive and seamlessly connected digital spaces, which is also, I think, very much in an early stage. So far the discourse around blockchain innovation, and this is certainly the case for the policy discourse, has focused on specific use cases, so digital identity, payments, tokenization, DAOs. But with Web3, at least as it's imagined at the moment, would bring these things together into an integrated and an interconnected environment. So in many ways, this session is really the capstone discussion for the forum. It gathers up many of the different elements of blockchain and DLT that we've focused on over the past few days, because this is exactly what Web3 development is seeking to do. So if Web3 does emerge along these lines, it means greater complexity in decentralized markets. It means greater composability of decentralized goods and services, and a much greater scale of adoption as well. So we've already seen over the past 2 days and in the work at the OECD on this over the past few years, that there are a number of open questions that policymakers are still grappling with in this space, both at the domestic and the international level as well. And some of these are around kind of key principles of markets and of governance, so integrity, trust, responsibility, accountability, and the same way that we've seen with crypto assets and DeFi markets, the complexity that could be added with Web3 may well make these questions both more urgent and more complex as well. So our discussion this afternoon is in a roundtable format, as I just mentioned. So we have 2 hours, and we're going to have 3 rounds of discussion on 3 key elements of the emerging Web3 world, which is payments in the digital economy, governance, and regulation and policy tools as well. So in each round, we're going to hear from our lead discussants first, and I'll then I'll open up the discussion to the folks around the room as well. And if you'd like to intervene, just put your hand up. And if I call on you, then just let us know your name and your affiliation as well. And there's a little red button in front of you on the microphone, so you can press that so we can all hear you, and our participants online can hear you as well. So we have had a little bit of an issue with our panel today, which really kind of demonstrates some of the need and the promise of the technology that we're going to be touching on today. So let me introduce our lead discussants that we have with us. We have David Schreier, Professor of Practice at Imperial College Business School. We have Ed Bowles, the Global Director of Public Policy at Meta Financial. And we have David Treat as well, the Senior Managing Director of Metaverse Business and Tech Innovation Incubation Group at Accenture. I think I got that right, David. I think we've also got a couple joining online presently, so I'll wait for them to arrive before introducing them. We have Valérie Fasquelle from the Banque de France, who's also running late, and we're also joined by Heather Dahl, the CEO of Indico. You can move over here if you like, Heather. She was a panelist yesterday and also a member of the Blockchain Expert Policy Advisory Board that helped develop the OECD's new recommendation on blockchain policy. So while we wait for our other remote participants to join us, I think let's take an opportunity to flesh out a little bit what Web3 is, or rather where it's headed, and what it might become. And to do that, I'd like to invite David Schreier to set the scene for us. So David, you wear many hats, but I think it's fair to describe you as a futurist, a technologist. You've published works on many of the really important evolutions over the past few years in the digital economy, including your most recent book, which is Global FinTech, Financial Innovation in the Connected World. So the internet is already a highly decentralized place, and I mean, it appears to the user often to be highly interoperable already as well. So, you know, what are the differences that we're talking about here? Why is this a big evolution or a revolution?
Yeah, so pay no attention to that man behind the internet curtain. It's not as interoperable or as powerful as it looks, but it's pretty good, right? So let's think about what Web 2 has brought us, and then we can get into what Web 3 is, right? Web 2 brought us things like being able to connect with communities of friends and family on Facebook. It brought us the ability to get a ride share and travel in an Uber very easily to get from place to place, or rent a room in an Airbnb. But it was still based on some centralized technologies and centralized data. And what Web3 is you know, I refer to it a little bit as like garbage collection. It's like a catch-all term that people have thrown in: DeFi, decentralized finance, NFTs, non-fungible tokens, distributed apps or dApps, metaverse. But these technologies, despite being fairly disparate from each other and lumped together under the title of Web3, do share some common principles. And that lets us understand what Web3 is all about. And so the way I like to think about it is it's bundling intelligence in with the data. So in a Web 2 world, you have your data in lots of different places, and you bring it together to a central server, and a big computer crunches it and performs intelligence on it, and then it gives you some output. Whereas with Web 3, you've got a lot of intelligence traveling with the data. So for example, I had some friends have trouble getting in here to the OECD because they didn't bring their passports with them. So the OECD computer systems couldn't access a centralized database to verify and validate identity, whereas in a Web3 world, you might have yourself as your identity. You might have some validation protocol on your phone, and everyone had their phone with them, but you'd be able to travel with a testable identity. You would have control over that identity data rather than relying on some centralized database. And probably that centralization to decentralization concept is the most powerful and profound of the Web3 revolution. I'll offer an observation and a caution as well as a provocation in kind of closing out the introduction to Web3. So the observation and caution is some folks are trying to use Web3 to get away from regulation. And I'll tell you now, it's not going to work. So we heard this alluded to on the panel yesterday. You know, people are trying to almost weaponize DeFi in order to escape regulation because it's magic money. It doesn't really operate. It's algorithmic money, so therefore there's no central locus of control. So how could we possibly regulate it, because it doesn't have a single person to go throttle if it's used for money laundering? And I think that doesn't give regulators and policymakers enough credit. I heard this argument in 2014 when people said Bitcoin was magic money, and it didn't work then, and it's not going to work now. So that's sort of the observation and world of caution, that those algorithmic DAOs are not as clever as people think. The observation that's a little more provocative, I think, is as follows, and this speaks to the potential of Web3. Think about what comprises Alphabet's $1 trillion market cap. Why is it worth so much money? Well, it's not because of the patent portfolio that Google spent years accumulating. It's because of the giant database that they use to power search, which drives 80% of their revenue even today. That centralized private pool of data is what makes Google valuable, what makes Alphabet's market cap $1 trillion. Web3 can take those kinds of economics and distribute them to every single person in this room and every single person not in this room. And so how do we do that? How do we put people in control of their data, which is what unlocks the economic potential of Web3?
Thanks so much, David. That is a really good foundation for us to build on in our conversation. I think we've now been joined by Millie Perry. Hi, Millie. Millie is the Blockchain Excellence Center of Chair at the Israeli Chamber of Information Technology and a founder of DAO for DAOs. Hi, thank you for joining us from Israel, Millie. And we also are joined now by Akira Nozaki, who's the director of the digital agency of Japan. Welcome to you both.
Thank you for having me.
So let's move on to our first kind of discussion round, which is on payments and the digital economy. So, you know, with the things that David's just outlined for us, I'd be interested to delving in a little bit more about what trends in innovation and investment and the activity towards Web3 kind of means for digital markets, because it sounds from what you're saying, David, that if this thing comes to pass, then it would be quite a different beast that we're dealing with. You know, so what is the implications for money and payments for the nature of assets and the kinds of economic opportunities that are being pursued by governments as well? I mean, I was intending for Valerie to kick us off because the Banque de France is doing a lot of reflection in this space right now, and with any luck, she will be able to join us and give us her reflections on that. But maybe in the meantime, Akira, I can turn to you, and you can let us know what the thinking is from the Japanese government around a Web3, the kind of market shifts and the economic opportunities that the Digital Agency of Japan sees here.
Okay, thank you for having me in this exciting session. I'm a director of the Japanese digital agencies. Japan Digital Agencies plans to launch a Web3 study group just tomorrow morning. So to begin the discussion of how to enhance the innovation-friendly environment for Web3. The group plans to prepare the report by the end of this year. The ultimate goal is to ensure access to the new Web3 economy and lead to economic growth by creating an attractive business environment for engineers and entrepreneurs, as well as preventing the outflow of human resources on the ground of tax incentives and regulatory arbitrage. Most recently, just a few weeks ago, I think, the US and the UK and other countries have announced policies or intentions to promote Web3 from the perspective of economic growth and strengthening international competitiveness. And Japan will work in a manner consistent with international trends. Besides that, let me highlight the following two examples of policy priorities, which might be distinctive in Japan. Blockchain technology has the potential to change the nature of the traditional internet and lead to further social reform through the direct interconnection of various users. Fortunately or unfortunately, Japan is one of the front-runner countries facing serious social issues, such as aging populations and depopulation in the local areas. Besides economic growth, it is also an important mission to address these social issues using Web3 technologies, in my opinion. Most recently, there have been some cases of local government issuing NFTs, non-fungible token, associated with local specialities, such as Nishikigoi, beautiful colored carp, and involving NFT token holders as digital citizens in decision-making for the measures of regional revitalizations. We would like to support the active use of Web3 technologies by local governments to address such social issues. Another distinctive feature in our policy priorities is how to activate Japan's cultural and artistic resources by utilizing Web3 technologies while protecting the rights of creators. With incorporating the above-mentioned Japanese perspectives, we will prepare a policy package towards the end of the year. Thank you very much.
Thanks very much, Akira. And you touched on something which I think is quite important to this discussion from a kind of a market and a regulatory perspective, which is NFTs and digital assets as well. And I mean, there's a lot of thinking, obviously, and action in the crypto space. Non-fungible tokens are something different, not financial, or at least not explicitly financial. I think they are already being securitized and acted as collateral in DeFi markets, but that's something that we can go into a bit more detail about. But I wanted to ask Ed for some reflections, both on the kind of changing nature of assets, whether they be financial or non-financial in this space, what you see is kind of the direction that they're going and some of the potential issues that this innovation could pose to market governance.
Well, thanks, Oliver, and thanks to the OECD for pulling this group together, and thanks to the 60 or so people online joining us together with our two other speakers who are online. Well, it's a trite observation to say that there has been obviously an explosion in the creation of assets and monetary vehicles. You know, the fact that there are some 7,000 or so cryptocurrencies, some 1,500 or so stable coins, and we're seeing a burgeoning push by governments into creating their own central bank digital currencies, is a reflection of what else is going on in the market. And David sort of touched on a number of the sort of activities coming out of DAO communities, for example, who are very busily sort of creating lots of other digital assets, some of which are for the remuneration of developers in their communities, and some of which are building structures for the future, including new sets of payment rails, as well as other forms of portability of digital assets. But at the core of it, I think, is the sense, particularly accelerated through COVID, that, you know, we are increasingly operating in a world of e-commerce, and that most of our futures at some point will transition largely to that sort of environment and much less to sort of physical exchanges. And the question, therefore, for regulators and policymakers is how to facilitate and enable this sort of activity whilst keeping a wary eye on some of the nefarious aspects of what may go on in that space. And here we are in Paris, almost at the heart of Europe, where the European institutions are just in the process of finalising MiCA. They had almost concluded it. There was a political trialogue reached at the end of June under the French presidency, but what they call the silence procedure was broken a couple of days ago by some member states, so some aspects of the trialogue will need to be renegotiated. But the point around that is to create for the first time a framework to recognise digital assets and vehicles for the conveyance of those, not only payment, but for example, Meta will become at some point, you know, a crypto asset service provider as defined under MiCA, along with a number of others. The means by which these things can become regulated entities so as to provide a degree of consumer safety, as well as obviously financial stability considerations being addressed in a more supervised manner. At what point that reaches a tipping scale remains the open question. Right now, I think it's probably fair to say, despite the large numbers of people who are buying relatively small amounts of cryptocurrencies, the conveyance of digital life through non-fiat mechanisms is still on the margins of the true volumes that could otherwise be achieved. And certainly one of the things that we very much at Meta believe in is that some of that tipping point will be reached when we establish interoperability between worlds in what will form part of an interconnected and open metaverse. And that's very much where a lot of our focus is now. So whilst on the one hand, we're very much engaged in facilitating creators to display NFTs in the form of digital collectibles that they have created through Instagram and Facebook, and on the other hand, we're building an environment called Horizon Worlds, which is launched here in France, is launched in Spain, the UK, Canada, and the US. and the hardware that enables you to access those worlds, the true scale of what is potentially achievable will only come when our Horizon world is connectable to other worlds that other players, be they DAOs or other large companies or indeed individuals, are building. And we certainly aim to provide the capability for developers to host worlds within Horizon worlds that they will run, that they will be responsible for, where they will create digital assets. And I think some of the things that policymakers need to start turning their mind to is not merely the financial regulatory aspects, but how do you recognize and protect digital assets in the same way that you do physical assets in the real world, so that there are enforceable rights that you can take to a local jurisdictional arrangement, a court, for example, so that what you've created and what a blockchain will show that you are the owner of is something that has intellectual property protection, for example, so that you don't obviously find yourself being ripped off. The UK Law Commission is in the process of consulting on this exact issue. I think it's one of the central issues for international organizations, the WTO, I think, to turn to as a matter of urgency in terms of digital services and recognizing the role of digital assets as they move forward. And I think this is a space that's going to evolve very, very quickly, where I suspect the public sector will be struggling to keep up with where industry's at.
Well, hopefully this is at least the first step in the public sector discourse around this, and I think that's a really astute observation about trade flows and rules as well, because you know, as we've seen, the politics around digital goods in the WTO is extremely difficult, about where they are created, where they are consumed. There aren't hard and fast rules around this. It's a moratorium that is renewed every couple of years to kind of keep agreements in place. But I think that this at least is one big area that will force the hand of the international community going forward. So we heard a lot there about the Internet of Ownership potentials and opportunities for businesses as well. David Treat, Accenture works with a lot of those businesses in a lot of different ways. You know, what are you seeing in terms of both the pace, the direction of innovation, and opportunities for new business models that are being enabled here?
No, thank you, Oliver, and again, thank you to the OECD. It's fun to be back here. I think the last time we were here on this topic was 2019, so it's great to be back in person again in this location. So, building upon the previous comments, we think we're spot on. We are at the beginning of fundamental business model change. And I think the cat is out of the bag. I think the ball is rolling down the hill. I think it is the speed and pace with which we get there. It may be overly trite to do this, but if we just reflect on the history of the business model change that we are changing, right? We're roughly 130 years into a business model that was arguably much older than that, but paper-based beforehand. But with the advent of the telegraph, we basically been living for the past 130 years in a message-based business model, where to get anything done in this world, I have to send you my view of the world, you send me yours, we reconcile, and it's very agency-based, right? The service provider or authority with whom we are interacting is the one who holds our data, and we've given up, certainly in the past couple of decades, any notion of privacy or control, and the proliferation of our data is everywhere. And so the cat that's out of the bag from a technology perspective, I think the panel's already commented on, of my ability to navigate the digital world, if we think about the end state of where we're heading, needs to be better than, let's not even go with equal to, let's go with better than how I navigate the physical world with this device, right? I've got a wallet that contains physical tokens that represent my citizenship, my driver's license, my my banking relationships, my credit relationships, my money itself. We've awkwardly, I would argue, been in this model where we've had to rely on agents on our behalf to hold that information in the digital world, and we use passwords and and logon addresses to get that service, and we've given up that data. So now we have this potential to have a brand new business model construct of through the tokenization of identity, money, and objects, and the necessary wallet infrastructure that emerges that's as simple but does better than this does for me in the physical world. If we think about what that means in terms of the world of business and services, when I am holding all of my verifiable credentials of my identity, money, and objects in a wallet managed by me, I think the nature of the winning digital business fundamentally changes. Today, the winning digital business is the one that can position itself to harvest the most data off of a network, and then run machine learning algorithms and high five each other if we get a 4% hit rate on an advertising campaign, right? I think we're going to look back on that and chuckle, because what we can actually move to is I believe that in the next period, and we can debate how long it'll take us to get there, we're moving to a model where the winning digital business is going to be the one that earns the trusted access to my actual data in my wallet. And the mechanisms by which we can then do that from a technology perspective, we are testing right now in our labs environment, that whole notion of if I want service from a service provider or need service from an authority, I allow them to embed their agent into my wallet to read actual data. I think this fundamentally changes the dynamic. I'm now in control of what access I'm giving to the community that's serving me, and we now can not only reclaim the control and the visibility as to who's using what, and renegotiate the value that we exchange for that. I want to shop at this particular clothing store and I want hyper-personalized service from them, so I'm willing to give them access to actual data about, my, incredible weight gain through COVID, right? I need a whole new wardrobe, right? And I want to exchange that information with them, and in return, they're going to give me hyper-personalized service. That value exchange is now going to be, in my negotiation, but maybe most powerfully, and it's simple, I can also end the relationship. I can kick that agent out of my wallet. They no longer have access to my actual data. I have not proliferated my information. And so the winning digital business, I believe, in the next period is going to be the one that earns my trust to allow them to access my actual data on my terms, in my control. Now, that doesn't, I think, necessarily mean the end to, I appreciated David's comments around, the alphabet's power of having all of that data. I think the challenge and the opportunity for all of the existing service providers and authorities that are in that position to harvest the information off of that data, I think they have wildly deep new value pools in how they provide me that service if they can earn my trust to have access. So I don't think this is, I think this is a continuum of value pools and services, and creates a whole new basis for innovation as we press forward. And so in order to get there, I think a huge focus on open source foundations, so that we're using common foundational code bases. A huge focus and credit to the OECD and others around the common standards that need to be able to drive that, lest we end up simply replacing today's giant agents that act on our behalf with new ones, or perpetuate them. And similarly, I think we'll get to enough. Sorry, I will hold fire on the next question. We need to have the highest quality of standards around that, the tokenization of identity, money, and objects to be able to support it. I will spot in for discussion in the coffee break afterwards. I think fungible tokens are vastly more important than non-fungible tokens. We'll leave that one there for a second, though.
Thanks so much, David. Plenty to unpack there, both in terms of kind of the changing nature of data, personal data, the identity layer that we have at the moment versus where it could go, which David Schreier also alluded to. I wonder if I might just turn to Heather, actually. Heather, you've been operating this space. Indica is a company that's working with governments to kind of realize some of this. And I wonder, just kind of as an entrepreneur, as a practitioner, whether what you're hearing is kind of consistent with your experience and where we're going.
Yes, when we talk about the ability to have possession of your data away from a centralized repository. Like we talked about, the huge focus on open source and open standards, and exactly that the winning model is the business who's going to earn that respect and trust in order to access the information. But I think it's important when we talk about Web3 that while we talk about the decentralization, we talk about NFTs, we talk about dApps, what we have to talk about is our approach to identity and how to assign who has the authority to share that information, to exchange the information, to verify that information. Because where we got ourselves into the situation we are today is that missing layer of the internet called identity. And so are we creating Web3 with a new focus on how identity is handled, or are we replicating Web 2 identity? Are we replicating a federated, centralized focus of identity and just throwing that back into Web 3? And I would argue if we continue down the road where identity is attached to centralized databases that are controlled by third parties, where the individual, the entity, or the device doesn't have the ability to own, possess, and authoritatively share that information, we're just redoing the mess that we got ourselves into today. And so I think it's really important that when we talk about NFTs, NFTs are very limited in how they can share the full amount of data behind an individual, an entity, or even a thing. And that we have to think beyond that and say, as we talk about Web3, we talk about decentralization of our identity. And that is absolutely just as important. While it's not a sexy buzzword like an NFT or a dApp, it is more crucial, I would argue, than saying we just are going to take NFTs to solve all this. And so absolutely what we've heard about is really important. What we have to make sure that we continue to talk about is using these open source communities, using these open standards to create an identity layer in Web3. When you go and talk to digital natives and you talk about this world of Web3 or metaverse, it is really interesting. I have spent a fair amount of time at Comic Cons, and why is that an important place for those of us in this room to consider? It's because you have digital natives who are very involved in gaming, who are very involved with their avatars, with their digital being. And when you talk to them, why would you want an avatar to conduct your life? They just think they are the avatar. They see Web3 and the metaverse as the ultimate of personification. They see Web3 and the metaverse as fully realizing who they are as a human. And for those of us who do not necessarily grow up as a digital native, we still think of ourselves as separate. Me and my transactions in e-commerce is very different from me going to a bricks and mortar store. In their world, it is not. It is all the same. So the respect in how they control their identity, and they think actually very contextual with their identity. They really understand that who they are as a student, as an employee, as a son or daughter, as a friend are very different. And we kind of blur them in the physical world. But when you go back to it, the importance of identity in the metaverse is the ultimate of personification and how I have the ability to control and share my information with other sources with authority. And it is not a separation for that digital native community from our physical world anymore. And that's a very interesting conversation to have.
Thanks, Heather. And I think, well done for talking to the kids about this. I think it's maybe something that we could all do a little bit more when we're talking about the direction of digital life, because they're the ones that are going to be living it for the most time. But I'm also picking up a slight tension here between the kind of goals of decentralization in these marketplaces, but also the user experience, user capacity as well. The existence of potential agents or maybe data fiduciaries or however we might conceive of them kind of implies that there's a role for actors in this space to kind of be managing us as well. And I think one of the observations around current Web3 products and services, be they NFTs or in decentralized finance, is that the platforms actually pop up very quickly. We have firms like Coinbase providing wallets that we could actually have ourselves and host ourselves. We have platforms like OpenSea managing NFT marketplaces as well in a very decentralized way, and they have quite a lot of platform power already for that reason. So I think kind of squaring that circle is not easy, but it could be a generational thing as well. I want to extend a very warm welcome to Valérie Fascal, the Deputy General Director for Information Systems at the Banque de France. Thank you for joining us, Valérie. And just backpedal on our conversation a little bit, because before you were here, we talked a little bit about the changing nature of assets, or digital assets, financial or otherwise. Ed mentioned, new types of payment rails between platforms and between people, new types of assets, and alluded both to crypto assets, but also, I think, the importance of any eventual central bank digital currency in this space. You head up the Banque de France's kind of lab, the innovation section, and I think it would be really beneficial for us to hear how you're, as a very important public authority and a market regulator, thinking about some of these big shifts.
Thank you very much, Oliver. So thanks for inviting a central banker in such a very promising discussion. I just wanted to come back on some elements you mentioned to give also the view of the central banker I do represent in this forum of discussion to share our thoughts on what is currently happening. And the way we look at digitalization, tokenization, or a decentralized world is the following. We think that it's probably, in front of that, we are probably in front of a kind of Schumpeterian revolution or evolution, something which creates a value, but which is also destructing or possibly destructing other things. So the question is how we as central bankers look at these phenomenon. So the first element is that we are of the opinion that all these trends are profoundly changing finance, or have the potential to profoundly change finance and to possibly challenge the current equilibrium which exists in finance along three axes. You already mentioned them just beforehand. The first one is the new actors who are popping up in this new world. We knew so far the fintech with the traditional banks. We are now seeing big techs and a lot of new actors that are taking this opportunity to pop up in the world of finance where they were not that present so far. The second axis of transformation is indeed the assets and the settlement assets in particular. So far we have an equilibrium of the banking system which relies on the coexistence at par between central bank money, public money, and commercial bank money. And we see something else popping up in this picture, which are the crypto assets. And that's also a new animal in the landscape. So the question is how this new asset is potentially changing the equilibrium we have in finance and in payments, usually speaking. So far as a client, as a customer, I do primarily use commercial bank money, and I have trust in this commercial bank money because I know that this money is issued by entities which are supervised entities by authorities. So if now I'm turning to new issuers, how can I get the guarantee that I will have the very same level of usability, but also trust, transparency that I can currently benefit from my commercial bank money. And the third axis of transformation is, of course, infrastructure and the way all these new rails could affect also the way the finance could work. So from this perspective, these changes are obviously questioning the role central banks could play and the role the public money also could play. So from that perspective, digitalization, tokenizations are topics of the utmost interest for us. And we are also approaching these topics in the light of our mandate, which is to guarantee financial stability. So here one may question that or understand that financial stability means a kind of paralysis of actions, but stability, financial stability is primarily a matter of trust. So this brings me to the second point from a central banker perspective. We look at all these phenomena also in the perspective of ensuring efficiency, but also safety. So these are the two sides of the very same coin. You cannot guarantee efficiency without the conditions accompanying these efficiency. And these conditions are called safety, trust, whatever you could call them. So our second message is that our mission of central banks is to, referring to our mandate of financial stability, is our governor said very recently, we have a dual role, which is both anchors and catalysts. And I think that indeed that's the way we should confirm the settlement of our mission. We are anchors into the financial system. So therefore we should look at the way the public money is made available to the public. So this could bring us, lead us to elaborate a bit about central bank digital currency, because it's really an anchor for the financial system. That's also the reason why we look very positively at regulation and at a flexible regulation which could address the new risks that may come also from the benefits brought by these new trends of tokenization or, generally speaking, digitalization. So that's very important to have a regulation which is not something which should be too rigid, but there is the need for having an innovative regulation as well to be flexible enough to tackle the new issues that are triggered by these new trends. And the third part is that all this is not enough. I mean, regulation, central money is not enough. We have also to innovate and to play an active role in innovation. That's also the reason why this led us to launch this program of CBDC experiment, but more generally to look at innovation in a very agnostic way to better understand it. So that's also our mission of central bank, and that's also the reason why in our lab we are currently experimenting on blockchain, of course, but also on digital identity, which is indeed a key element in the landscape, on artificial intelligence, and so on and so forth, post-quantum cryptography, which is also an event that may affect payments in the future. So this is really the way we look at innovation from a central bank perspective: anchors, catalysts, new opportunities, but also new risks, so to keep this flexibility in assessing the phenomenon.
And I think that kind of is one way of addressing that tension that I mentioned before as well, which is a decentralized kind of ecosystem with, as you say, certain anchors in certain places. Let me finally turn to Millie Perry. Millie, in in your work in the Israeli Chamber of Information Technology, I mean, you deal with a lot of businesses, entrepreneurs, startups in this space. So I wonder, I mean, we had an excellent session this morning with entrepreneurship and Web3, and so, you know, I wonder, you know, how do you see this evolving in that sector, and, you know, can we kind of challenge or replace the power of platforms, and is there a space for smaller actors in building some of the infrastructures for a new internet that we've heard?
Yeah, well, I have to say we ought to face the issue. David was referring to cats run out of the box. I think we're facing the elephant in the room. We're in the midst of conflict of interest. We're trying, we somehow symbolize Web3 after Web2 as continuous, but it's definitely not. It's not an evolution, it is a revolution. And we have to face that there are conflict of interest because we are trying to assist or help a centralized institution like governments and banks and platforms to turn into decentralized ecosystem. It's against their nature, it's against their power, it's against their interests. So we ought to, you know, this is very honorable institution, the OECD, but we're in the midst of a war. This is a war zone. And we're trying to use our very delicate and politically correct words, but it won't go this way. I mean, yes, we need regulation, and yes, we need order, and yes, we need to establish and to understand the position of the nations and companies and so on. But the way or the future I can see Web3 is aiming is not, it won't be easy. It won't be easy because people are losing their control. We're referring to the owner, even our terminology is not in place. We're still calling the user, but they are not user anymore. They are owners, or maybe own user. We can use the owner and the user together. It is not a hierarchical situation anymore. Facebook could not dictate me which kind of service I can consume. I would be the owner or partially own the infrastructure or the technology or the company, and we want to have an impact. We don't want to have a command and control hierarchical format as we have today, and the change between the intermediary interaction into ownership-based digital economy would be, it won't be easy. It won't be very quiet. It would be kind of a fight. And I wonder who would endorse this process else than the owners, the users, or the investors. Because companies and central banks, as Valerie said, they want their control, they want their order in place. I'm not sure that trust comes with order. I think trust comes with the sovereignty of those owners and the freedom to choose. Because today we don't have the freedom to choose. We have some dictation from a few infrastructure, technological corporates, and we're in their hands. We're not, we even lost our position as a customer. We're not a customer anymore. We are part of the service, a component in the service. And I think we ought to gain this, in the least, to gain our customer position again by using all the new tools and technologies that blockchain brings to our new ecosystem, decentralized ecosystem. Mind you that centralized and decentralized are not 0 and 1. It's not binary. It is a range. And in this range, we ought to have some negotiation with the old regime toward the new future.
Thanks so much, Millie. A lot of provocation there, which I'm very keen to unpack, and I think it's also an excellent segue to our second topic of discussion, which is governance. But before we move on to that, I just want to throw it out to the people around the room to see if there are any thoughts, interventions, questions on what you've heard so far. And if you'd like to say something, just raise your hand. Yes, over here.
Hi, I'm Miguel Nevo from INX. It's a trading platform for digital securities and cryptocurrencies in the United States. We take the hard path because we went to the SEC, got the approval to raise capital in security token, and then started the business. And I think the most interesting part here, we understand regulation much in the very hard way, because we went to the lion cave, get the approval, then started the business. And I think most of the today startups, companies doing the Uber side, they start a business, think great things, and they meet regulators, and there's a clash. I think the problem is not the round table, because there's enough round table. I think the problem is we are not aiming for the person that really affects them. And that's why I want to ask David Treat from Accenture, because he meets them, and Accenture really understands regulation, and they're really part of this negotiation. Are you helping startups to build the right the right legal structure, or the phase that really sees regulation or directives that we know are going to be basic? Because eventually, I don't think the financial world will be changed because enough communities will ask that. And I don't think that users or owners that use today web3 eventually won't need the protection, because if somebody's bullying them on cyberplace, they want somebody to be punished. And if someone is stealing their own assets, they want someone to be able to do that. I don't think the community will have this kind of power. So I'm aiming for the person that builds startups, and that's what we're talking about. We're talking about Web3 companies that eventually change the way. And I know Millie very well, but I think we are not proving the same, because I don't think a revolution is the right way to do things, because most revolution in the past, people got added. So I think it's going to need to be an evolution, and if the technology knows to do something, it's to evolve and take possible dreams and make it true, but stay in one pattern. Sorry for the long question.
It's a great question, and I'm afraid I'm going to bleed a little bit into the next topic, so I'm going to look for Oliver to kick me under the table to stop at the. One of my other day jobs is I run the FinTech Innovation Lab as a program we founded with the Partnership of New York, and it now has a global focus. But the nature of that program is we take in each country, we take about 12 startups out of an applicant pool of a couple of hundred usually, and they get direct mentoring and guidance from the irony is that from the organizations they're trying to disrupt. So the FinTech Innovation Lab program in New York has the 44 largest financial institutions on the planet who donate their time to coach and mentor these startups. It's a non-sales based environment. And then we have regulators in residence who, and the like. And the whole purpose of the program is actually, there's a little bit of refinement of the pitch, right? The nature of the revolution, right? And too frequently, and I'm not going to throw any accusations in any directions, but too frequently, all of the focus in the startup is on the happy path, phenomenal idea, but it's the happy path side of it. And the speed with which they can understand what does it mean to be a scale system? What does it mean to be at scale? The quicker that they can envision that, the better. And in doing so, what you do is you know, there's a framework that we apply in all of our metaverse and you know, and related work is a risk-adjusted profile that says against a certain set of criteria, like who's going to fix it when it goes wrong, you know, who's going to, you know, how do you address predictable modernization? How do you adequately, you know, constantly monitor for security concerns? You can go down a checklist of things that you can put against a gradient of the importance of the business function. But the more important the business function, the more rigor you have to apply, and the quicker you do that and you think through it yourselves, the easier that conversation is with the regulator, you know, later. The dynamic of working on your wonderful idea in a happy path only mode is the quickest way to, you know, a really tough time with the regulators. And so that is the primary difference of how do you envision that scale system and the control, you know, the control mechanisms that need to be in place. Your comment about the revolution, right? The characteristics of every revolution or populist movement is, of course, they're wildly popular until successful. And then you put the next regime in place, and they have to relearn and reestablish all of those control dynamics. So the quicker we can meet in the middle, the better. The quicker we can, you know, have the wonderful idea be wrapped around the fact that my parents will need a phone number to call, and there's got to be a call center to answer that phone call to understand how to use it. You know, those kinds of dynamics, you know, the quicker you can embrace those, the better.
David Schreier, you look like you want to weigh in on this one as well? No?
I'm going to hold fire until we get to the regulation and policy discussion.
Valerie, please.
So very quickly to share with you the way we work in France on that. So first, I think that we should avoid the work in a silo mode between the regulator on one side, or market supervisors or supervisory authorities, and the market in another silo. So that's in France, we very much encourage fintechs, any kind of entity having a project to liaise immediately with either the market authority or the banking supervisor, should they be willing to get a license. So at the ACPR, which is the French supervisory authority, we have even set up a dedicated unit which is in charge of playing this interface role with the ecosystem in order to facilitate the mutual understanding of the rules, explain the rationale of the rules also, which is for us to make sure that these rules are currently understood to make the project as efficient and as fruitful as possible. And that's also the way the Autorité des marchés financiers, which is the market supervisor in France, is behaving with a mirroring unit they have on their side. And the only point, the last point I wanted to mention, which is also making a transition with the topic on the governance, is that it's not a matter of taking care of the underlying technology. From a banking, from a central banker perspective, we are completely agnostic of the technology. What is important for us is the nature of service which is provided. And we have to understand these very clearly. And the only element which is guiding us and guiding the supervisors and the central bankers of the international community is the rule: same activity, same risk, same rule. So, because we do not have, we do not want to have a kind of regulatory arbitrage, discouraging some new actors to implement their activity in one country. So that's also a very huge challenge for the community of supervisors to guarantee these regulatory level playing field across the globe. So that's a very fundamental pillar of the way we look at these dossiers.
Oliver, may I intervene?
Absolutely. So let me now welcome Rihanna Stringer-Laddak, who is the head of Interactive Technologies Digital for Culture and Education at DG Connect at the European Commission. Thank you for joining us. Rihanna, I understand your plane was delayed, which means you were delayed. So I'm very pleased that you can make it. And please, we'd be very keen to hear your thoughts on this.
Yeah. So indeed, I'm really, my apologies for being late. I mean, flying, especially for professional reasons, has become excruciating. Nonetheless, I could make it, so I'm very pleased to be here. I wanted to chip in on the last on this question because as the European Commission, we are obviously regulators, but we are also policymakers, and don't forget we are also investors because we have one of the biggest research innovation programs, which is Horizon Europe, and we also have the Digital Europe program and the Creative Europe. So we have a number of programs that are also there to support the regulations and the policies that we put in place. So what I wanted to say that putting my hat of regulator, but also policymaker and funder, it's really there are three big dimensions. The first one is when we regulate, it's not simply to restrict what you can do and what you cannot do. It's really about having the right timing and the right balances in bringing what the previous speaker said, the level playing field. It's about providing a legal stability to different operators, which does not stifle innovation, because we're always very mindful that we need to promote innovation. So this is something which is very, very important. And we really want to come up with legislation that allows new entrants to come in, especially if you look at the recent legislation. So I'll speak, for instance, about the Data Act, which is done by my Directorate. So the Data Act is one of our latest piece of legislation, which is about how do we further allow the sharing and the reuse of data, especially for industrial purpose. And one of the reasons one of the underlying rationale is that we have a number of barriers, such as the limited switchability of cloud service providers, insufficient access by SMEs, and that the Data Act is precisely gearing towards operators or economic operators such as SMEs who have so many barriers to be able to make use of the data. So that's just one perspective to keep in mind, is that legislation is also there to empower specific industrial segments. And the third thing is that as regulators, we also have policies and our funding programs that allow us to have this constant exchange with the people we are regulating. So it's not simply saying what you can do, but it's also providing the means, to thrive in what the different operators want to do, and be in this constant exchange of what we call the policy feedback. So we know what's going on the markets, on the different domains, and then we can adjust and intervene again or not. So that was really a kind of very general way of how we operate, but I think you have to keep in mind this different equilibrium that we need to bring it in our responses.
Thanks so much, Rihanna. And I think, that was very complementary to what we've just seen, which is, it's kind of a question of inclusion, right? And that's what Millie was getting to in her war zone, is what we've just heard about, the kind of challenges to SMEs. So it kind of has to be, if we want this to be different to what we see now, then the governance has to be different and the opportunities have to be different as well, which does bring us to our next discussion round. And actually what I'm going to do is collapse governance and regulation and policy tools altogether, because we did start a little bit late. So we're up against the clock, but what we've heard just now from Valerie and really throughout the whole conference is, the challenges in bringing decentralized markets, and and as you said, Millie, they're on a spectrum. So perhaps on the further end of the spectrum, in lines with market integrity, financial stability, and kind of the challenge for collaborative standard setting and common approaches. So I'm going to ask everyone in the panel now. We'll do another tour. Just both, what are the emerging governance models seeking to address these and realize these goals? Is it indeed a war, or are the negotiations already taking place? And in terms of regulation and policy tools, both for the private and the public sector participants with us, do we have tools in place already that are fit for purpose to kind of guide us in that direction, or is there more to do? So maybe I'll start with Ed Bowles from Meta Financial. Warzone, Ed.
Well, I'm sorry to disappoint Millie, but we don't feel at war with you, Millie. We're very happy working with the community of DAOs that's growing up, to the extent that we were one of the founding members of the Metaverse Standards Forum, which launched 2 months ago. The whole point of working with companies like Lamina One, one of the other 40 founding organizations and individuals, is to build an open and interoperable metaverse, so that clients, users, people, owners can transfer their digital assets seamlessly from one world to another without any material friction at all. And so from that point of view, we see the community of DAOs as absolutely essential participants in helping drive the creative activity that will be part and parcel of the ultimate construction of a series of interoperable worlds that we will call the metaverse. And here we are, almost 30 years on from when Snow Crash was published by Neil Stephenson, and that same man has gone from creating the term and the fiction around the first metaverse to being one of the co-founders of one of the companies driving some of the innovation in this space called Lamina One. I'm not here to advertise any particular company apart from my own, but absolutely to say that there are some really significant tipping points now being reached with, the world of fiction that was created 30 years ago into reality that's being built, and the cooperation, I think, between larger, more established players like ourselves and the emerging community of DAOs is going to be central to, I think, building something that will be the next computing platform and the next way of living for our citizens. Full stop.
Ed, if I can jump in, could you say a word about the regulation by enforcement, only to clear our mind and hear your position?
Sure. I mean, it's obviously a multifaceted topic, and I was thinking during the last discussion, following on from the gentleman in the audience here who raised the question, one of the risks is regulating in haste. So, for example, in the discussions around the settlement of market in crypto assets regulation that the European institutions have almost concluded, was the risk that NFTs would be caught by that regulation. And, my principal concern and our company's concern was that individual creators who want to basically launch, digital collectibles should not be subject to quasi-financial regulation when all they're doing is producing a piece of art that is in a digital form. And so I was very glad that under the French presidency that NFTs were concluded as being out of scope in principle from MiCA, because that would have been hugely damaging to the European creative community to have creators subject to the obligations to produce white papers, supervisory jurisdictions of central banks and others, which are ill-suited to supervise art markets, realistically. I mean, it would have been completely inappropriate. And so I was very glad to see that. But that's a sort of an example of the risk that we face when regulators try to move a little bit too fast sometimes, and they end up disadvantaging what is basically a relatively nascent industry and could harm the incentives for creators to continue to invest in this space.
Thanks, Ed. So we have a Metaverse Standards Forum. That's one important, by the sounds of it, industry initiative. David Treat, you alluded before to kind of similar efforts in the digital identity space as well. I wonder if you could elaborate on those a little.
Yeah.
And just your microphone.
Yes. So the digital identity space itself is just wildly diverse with communities and consortia and ideas. The W3C standard, the diff standards, the Hyperledger Aries is what we've been basing, Indy giving way to Aries has been what we've been basing most of our work on. We're part of Trust Over IP. There's this just amazing Cambrian explosion of communities in the digital identity space focused on this pattern of self-managed digital identity. Was very proud a couple of weeks ago to be part of at the Linux Open Source Summit the announcement of the intent to form the Open Wallet Foundation to sweep up and bring together all of those different communities in true open source fashion as a welcoming to get us to where we need to be, which is I firmly believe a solid open source foundation for wallet infrastructure as the fundamental a fundamental part of the endpoint for all of us as individuals and as companies for how we interact in the new digital world that's emerging. And so the ability to create an open source foundation for the standards against which wallets can be made to drive all of the needs around portability of assets, interoperability of business flows and systems and communities globally couldn't be more important. I think we will all be woefully, we will all be very sad if we end up with a wallet per ledger, wallet per asset, wallet per context, and suddenly we've got as many wallets as we have apps on our phones. No one should want that. And so our ability to have an open source basis and an open standard, and good standards for a universal wallet infrastructure upon which then many can build and can focus on where the competitive frontier should be, which is the additional services and value add that can be provided through that wallet infrastructure and the creativity that will come with that. Let's put the basis of competition where it's most valuable, and let's all work off of a core common foundation. And so that's one example. I think if you take each facet, of the broad spectrum of identity, money, and objects, there needs to be the consolidation of focus around open source, open standards, and regulation against all three. And then how does that all come together? Because certainly identity and money are inextricably linked. You cannot conduct an effective, valuable, loved transaction without the right inclusion of both of those. Creativity can be applied, but at the end of the day, they're inextricably linked. And so yeah, a bit of a call to arms, a welcome. Again, anyone. The intent is to finalize the framework for the Open Wallet Foundation and announce it at the Linux Member Summit in November. So the next 4 or 5 weeks, if this even at least piques your interest, it's done in true open fashion. Anyone can attend, anyone can watch, anyone can join. Please do.
Thanks, David. So I'm going to finish the tour of the kind of private/academic side. First, David Schreier, and then again to Millie before turning to the policymakers. So David, you clearly have some reflections on what you've already heard, but can I also ask you a question, because you've been involved in tech governance for many different kinds of technologies and use cases, but is this a new problem? Haven't we been here before, and don't we have fragmentation already?
Yeah, so I'm gonna answer your question a different way and tie together a few loose threads, right? So I'm gonna talk about the benefits actually of some centralization, of some loci of control. I'm gonna talk about some of the opportunities of decentralization, and then a little bit on a new lens on how regulation is being formed. So first of all, for all that the community around distributed decentralized finance talks about the importance of decentralization, I have to look no further than Ethereum to point to the benefits of effectively central bank intervention. First, when there was the DAO hack, and Vitalik personally stepped in and basically rolled back a cybersecurity breach. One individual in a supposedly decentralized currency. And second, more recently, in the move from proof of work to proof of stake. Ethereum's now green, yay! but it was done by and large through the intervention of the personality of one individual. And so there is a role for having some aspects of central control, even in an environment that enjoys the benefits of decentralization. So when we think about governance and we're designing all these new currencies and these new technologies and these new identity systems, where do you want it to be in the hands of the individual, and where does it benefit from having someone helping coordinate it a little bit? The second is on the opportunity of decentralization. We were having this conversation over lunch. Android operating system is something that is supported by, and Google, Alphabet gets the benefit of 6 million developers who they don't have to pay, who make Android better. And in fact, they make revenue off of those developers. And so big tech, despite being sort of central forces of technology control, actually have a role to play in supporting a decentralized community. And Meta is helping support Oculus developers to make all sorts of cool things for Oculus and for the metaverses, plural, that will spring out of it. And so, you know, it's easy in these conversations for people to put on tinfoil hats and say, big tech bad, big government bad, decentralized good. But actually, there's a much more collaborative and cooperative, big-small dynamic that's starting to emerge. And finally, guiding this and helping shape this is a new generation of regulators and policymakers. So I've been a little distracted while sitting here because my phone's been blowing up because a former student of mine was asked to be the Minister of Finance of a country in the Americas and is trying to figure out her policy platform that relates to that. And she is a digital native, as Heather was discussing earlier. She is a crypto native. This is someone who builds DAOs for fun in her hobby time. And she is going to be helping guide the financial policies of a country that is in the process of massive wealth generation. And so the new generation of regulators and policymakers who are starting to step to the fore are very sophisticated about this world of metaverse. And so I exhort, we had this question earlier about the tech startups and how they can be smarter about regulation. I exhort anyone building a DAO or building a tech startup or building software to take part in a lot of these consultations and open fora and tech sprints that give you a chance to talk to regulators and policymakers in an informal environment. Because, oh, by the way, the expression, I'm going to date myself with this expression, this is not your father's Oldsmobile, as we used to say. There's a new kind of regulator and policymaker who you can talk to on a peer-to-peer basis.
Thanks, David, and I'm going to date myself by saying I have no idea what that means. But Millie, I think that is, I mean, decentralized autonomous organizations, you have DAO for DAOs on your background there. David was talking on the one hand about, you know, collaborative governance in this space, but also on the value of maybe some kind of centralization and some kind of potential for intervention. So I'd be interested in your views on kind of how you kind of balance that equation, if you like.
Okay. I just want to add some remark to David's speech before. I'm missing the realization that the blockchain is a new tool for regulators as well. They can use the regulatory act as RegTech. This is more transparent. You don't have to look into separate databases. You can use it as I don't know, RegTech hub. For instance, the CBDC, its network, its global network could be a fantastic anti-money laundering and know your client hub. Why don't we hear more about the opportunities for regulation that blockchain present, and only we talk about the new technology as a burden or as a problem? So I think we ought to put into our conversation and our dialogue the new opportunities for nations, for regulator, for global economy by using the blockchain as a new solution for maybe all the problems that we couldn't tackle very efficiently. very efficiently. Regarding the DAOs and governance issue, I have to say that I do see a lot of development in this field. For the last, I don't know, maybe in 3 pillars. We have regulators that face this issue of DAOs and the need of governance in decentralized huge networks. We have some international bodies like the World Economic Forum, INATBA, even the OECD talked about it a few times. And we have the ecosystem itself. So we have in last June, we saw the Responsible Financial Innovation Act in the US, talking about DAO and about the solutions that the US ought to bring to this arena. We know the UK has launched a consultation about DAO and about regulation for DAOs. We have an operation that I'm humbly can say I contributed to in ESO that has launched a new paper. Their title is Blockchain and Distributed Ledger Technologies Guidelines for Governance. There are some international bodies and regulators aiming at this new tool and understanding the needs of governance and creating a variety of solutions. It won't be one DAO fit all, and we can see fantastic development in the DAO ecosystem itself. Varying a huge amount of growing from, I don't know, skyrocket from $40 million to 16 billion and adding participants 10x, not 10x, 100x bigger than we had last year, from 1,300 to 1.6 million. We have about 5,000 DAOs that serves a variety of application, dealing with art, dealing with VCs, aiming at philanthropy and other tools and other fields. And I really believe that the DAO could be twofold. It could be the new kind of, the new form of future corporate, but it could be a blockchain native tool for a variety of blockchain ecosystem to manage and govern themselves. So we won't look at it only as a new format of VC or, I don't know, NFT collectors, but we can use it as a new form of self-management, a self-governing tool that we can use further in this industry.
Thanks, Millie. And I mean, I think what I heard there was a challenge to the policymakers who'll be speaking next. Clearly, as we heard from Valerie, there is an interest in the market integrity sides and managing the downside risks as well. At the same time, I mean, governments are interested in guiding emerging technology, to protect certain governance principles and values as well. And even though it's probably, I mean, I think everyone would agree it's too early to regulate in this space, there are appropriate guardrails to put in place as well. But at the same time, we have legacy laws and rules and regulatory requirements that kind of collide with some of the aspects of this technology and some of the activities in the market. So maybe I'll start with Akira and then to Valerie and then to Rihanna. But, what I heard from Millie was same activities, same risks, same rules. Does that apply to something that might be quite different? I mean, for example, financial regulation requires known persons and certain intermediaries to fulfill certain regulatory duties. Privacy and data governance frameworks are often entity-based. The question is, do we have what we need in place at the moment to achieve those guardrails? Does this technology require us to think a little bit beyond same risk, same rules, and maybe something towards same risk, same outcomes, and be a little bit more agnostic about how the market achieves those outcomes as well? So, Akira, to you.
Yes, thank you. When considering the issue of governance, for me, the most prominent characteristics of Web3 is transformation of the nature of trust. I think Valerie, Celine, and Millie mentioned this concept. And trust is an essential element in the fundamental design of a governance in a Web3 world. The ability to, and in the new paradigm of trust in Web3, the role of the government as one of the biggest building blocks of trust may also change. As a regulator, I believe that we need to examine what role government should play in the overall socio-economic web of trust, and what will be possible and what will not possible. Regarding the what will not be possible, there is concern that current regulatory approach will be less effective under a truly decentralized ecosystems. Current regulatory approach have ensured their effectiveness mainly through regulation of intermediaries. However, in a truly decentralized world, mediated solely by blockchain, the targets of regulation become ambiguous. Moreover, in the case of autonomous systems, the service cannot be stopped, even if prohibited by regulators. Furthermore, with the development of advanced anonymization technique using mixing technology also, the regulator cannot even trace the target to regulate. We need to address these emerging issues through international collaboration, including a wide range of stakeholders, not only among the regulators, but also academia, engineers, and entrepreneurs, and so on. I would like to highlight here, one of the notable approach is a global network named BGIN, Begin, Blockchain Governance Initiative Network. Please try to find a web page of Begin, BGIN, and you'll find various initiatives on this subject. So the next is regarding what will be possible. There are many areas in Web3 where there are no standard or common principles, and it is important for the government to play a leading role to set a standard or common principles, especially in the area of identity and DAOs. With regard to DAOs, we are investigating specific use cases such as social contribution activities and local communities. For example, a few weeks ago, we interviewed two young engineers in Japan running a DAO-like community where people learn to develop projects related to Web3. They have formed a community on Discord that allows members to learn from each other in a peer-to-peer fashion on various hands-on projects related to Web3. The learning history is visualized by the NFTs and issued after learning, and incentives are designed in the form of social tokens earned by helping others to learn. I understand the ultimate role of the government is to create an environment that facilitates the establishment or management of DAOs that can contribute to the solving various social issues. But currently, before stepping into the discussion of guidance regarding the legal status of DAOs, we need to review, as Millie mentioned, there are various types of DAOs. So we need to study first and analyze the incentive structure and governance structures. And this is the current stage of the DAO in Japan. Thank you.
Thank you, Akira. Valerie, I should clarify my previous statement when I said it's too early to regulate. I mean, it's too early to regulate some of these Web3 and metaverse aspects we've been talking about, but certainly in the financial sector, many of the activities are already regulated activities or fall into some kind of existing rule, and it's more of a question of non-compliance perhaps, or of regulatory arbitrage. So I wanted to get your reflections on what you've just heard and whether this technology invites a different approach from regulators in meeting the level playing field, which I think we all agree is a critical aspect of good market outcomes here, or do we need to kind of question some of our assumptions?
Oh, thank you, River. The first thing, I will have a couple of reactions. The first thing I would like to insist on is the fact that regulators do not regulate the technology. I mean, it's probably obvious, but it's important to be reminded. We do not regulate the underlying technology, and we do not want to be influenced by the underlying technology. It does not mean that we are not interested in technology, and I mean, I illustrated that statement with the experience of Banque de France. We are working a lot on technology. We have developed our own blockchain system and ecosystem with French credit institutions. We are in our CBDC experiments, we developed our own permissioned blockchain. So it does not mean that we are completely ignoring technology, and we fully recognize the merits of the technology. So the focus is not the technology, but the economic functions which are provided by the technology. And that's really the focus of our mission. We have, and this is really nurturing the rule or the statement, same activity, same rule, same risk, sorry, same regulation. So we look at the economic function which is allowed by the technology to see whether in the categorization of this economic function, it has some commonalities with economic functions we know in the traditional finance. And that's the focus of our action. That's my first point. My second point is that it's extremely important that I heard before that regulation should not be too quick. Usually I receive complaints that regulation comes too late, so probably there is a debate where to put the bar. I think that it's important that we know that the time for regulation is a long time compared to innovation and technological innovation. So it means that we should try to have the two time approach going hand in hand. So that's also the reason why I insisted before on the need for having regulations which are flexible enough to be adapted to the new services, the new risk, and not to constrain too much innovation. The objective is not to ban, the objective is not to ignore, the objective is to accompany and make sure that in the end the consumer, which basically most of the time is fully ignoring the technology because it's not the consumer who will be using the blockchain directly, so he does not care at all of the technology. He wants to get a new service with a much more innovative way of providing this service. So we have to make sure that in the end, ignoring the technology, ignoring what is in the background, the consumer will have the very same level of safety, hopefully a higher level of efficiency, but at least the very same level of safety he would have had by relying on so-called traditional features of the traditional finance. So that's really the way we look at it. And I'm also in agreement with one of the previous speakers saying that regulators, central bankers should not work in isolation of the rest. So that's really something very much important for us at Banque de France. That's also the rationale which is behind the setting up of our lab, which is to understand what is happening on the market, to better understand technological problems, development issues, and not to be in what we would say in French, our tour d'ivoire. So we really want to be involved in the activities of these new entrants, to understand their issues, to understand their doubts, possibly to share them, and at least to capture all these elements in order to nurture our own work of regulators. So for us, regulation, being part of the regulation process and being part of innovation are going hand in hand. So you cannot be a good regulator if you are completely ignoring what is happening on the market side. So that's also the raison d'être of our lab, which is an open innovation center. So it's primarily open to the external world, and for us to develop experiments with our own units of Banque de France, but together with other stakeholders from our ecosystem, should it be academics, startups, labs, or whatever. And that's also the way we conducted our CBDC experiment. So these being said, two last statements about regulation. I think that regulation, we need a regulation which is well-tailored, consistent, and evolutive. Second, we do now speak about actors which are global. So it's a complete nonsense to focus on national regulation or even regional regulation. So that's also the reason why the FSB, the Financial Stability Board, is working on an international dimension of regulation for these tokenization, crypto asset story, and so on, because we have to really build up a holistic approach of regulation. Otherwise, we will create disadvantages for some new entrants. And my very last point is that this role of the regulation should also work together with the work on standardization. Because besides the regulation, it's also important to create and set up new standards, which will also facilitate the work of the new entrants, but also the work of the regulators.
Thank you, Valerie. Rihanna, there's a lot on the table to react to, obviously with the common market and the digital economy union. There's a big acquis of rules and guidance for EU member countries, but as we just heard from Valerie as well, these are global markets, and even a regional approach is useful, but it may not capture all of the activities and the actors in this space. So perhaps you can give us some reflections on what you've heard, especially perhaps that global angle as well.
So what I'm going to say is very much aligned to what Valérie just said. So as I wasn't here for the first hour, just let me start by the starting position of the Commission, which is that the metaverse, which is really not just, it's not going to be Web3. The way we see it, it's really going to be a truly transformative way of engaging in this virtual world. So our starting position, and that's the way it was written in President von der Leyen's letter of intent, it's to look at the new opportunities and trends that it's going to bring. So this is our initial position, that there are a lot of opportunities for our industries, but also to address some of the societal challenges, for instance, in relation to smart cities, in relation to health, in relation to education. Let's look at that. Let's see, at the same time, have a better understanding, really go in depth in relation to the challenges that it's going to bring, because we know that there are, in relation to ethics, we are going to have to tackle a number of questions, for instance, which are related to the use of metaverse, the behaviors, this blurring that you may have between the real world and the virtual world. See the psychological effect. That's one thing. We also know that we are going to have some market issues to deal with. How do we avoid lock-ins and monopolistic behaviors? We also know, for instance, that metaverse is not just blockchain. Blockchain is one of the enabling technologies. We have a number of technologies such as extended reality, so AR, VR, mixed reality. We have AI, we have the huge data, the enormous amounts of data which are going to come. We have the connectivity. So then you have all the content, but so there is a huge integration of technologies to make that happen. Technological challenge. We have the interoperability, so that has been the discussion here. We have a huge challenge in terms of interoperability. How can you, for instance, if a metaverse is interconnected virtual worlds, how can you have portable avatars or portable digital assets? So these are a number of challenges that we will have to look into from a holistic point of view. And that's why completely aligned with Valérie is that one is that we have to go deeper into the opportunities, but at the same time understanding how it works and what kind of challenges are open. The second thing which I wanted to say is that in the EU, we are starting with a number of legislation, which is either starting like the Digital Single Market, the Digital Single Act, the GDPR, but we also have 3-4 legislations which are almost being finalized, which is the AI Act, which is really going to be define very clearly what kind of use of AI, is prohibited or not. We are going to have the Data Act, which we mentioned, and something which is very important, a piece of legislation, which is the digital identity. And it was already mentioned in the conversation how important it is to have a horizontal digital identity approach. So we are starting with this package of legislation, which for us are sufficient for the time being to promote innovation. So what we're going to be doing now in the years to come is to see how effective these legislations are for the metaverse, what are going to be the novel areas which are specific to the metaverse and which are not covered by existing legislation, and then only look into it. And for that, obviously, we're going to be discussing a lot with all kinds of stakeholders, and that's also what the previous speakers mentioned. So we are not sitting in our ivory towers. We speak to a lot of people, not only to government organizations, to industry, but also to the civil society, to academia, to researchers. We have a huge ecosystem, which is made of all these different players. They come together, and we need to have these different views, the industrial view, the societal view, but also the view of academia, which has this huge knowledge to share. So that's where we stand. But before I finish, a quick word about the 4 big blocks which are important for us, and that we consider that from a holistic point of view, they are needed. They will be our strand of work. So the first will be about technologies. How do we support all these technologies that are needed in the metaverse? So it goes beyond, of course, blockchain. I already mentioned them. Then it is something which we didn't mention a lot, which is content creation. Content creation is absolutely crucial when you need to have quality experience, when you need to have not only for the creatives, but also it's not digitized content. It is content that will have been developed for the metaverse, taking into account the specificity of that kind of immersive, interactive, real-time interaction. content creation standards, and it's also about people, because this is, for us, it's going to be one of the key aspects, is how do we make sure that any development of the metaverse will be a human-centric metaverse, and that the user is at the heart of those developments. Voilà. So that's in short a bit our initial position at the Commission.
Thank you, Rihanna. We are almost out of time, but we also started a little late. So if we take a few extra minutes, I hope everyone will bear with us. I'm going to open up to questions now, either from around the table, or if our discussants want to pose questions to other discussants, I'd invite that as well. Over here.
Thank you. My name is Alexander Weinberg. I work for the Federal Ministry of Economy of the Federal Republic of Germany. Let me say thank you first to the OECD for this very interesting conference so far, with the excellent speakers so far. It's very fruitful and enlightening. I have a question which circles around the topic metaverse and touches upon what Millie said, but also what David said in the beginning, and especially what Rihanna just said. One question I usually get from our games department in the ministry is, what's the use of a blockchain-based metaverse, especially in the games sector? Because if you look at universes like Roblox or NBA Top Shot and those things, they perform pretty well without actually being part of a metaverse, because they're actually closed. This brings me to what David said in the very beginning, because he said, the fact what makes Alphabet a trillion-dollar company is, I guess, also the fact which makes Meta a multi-billion-dollar company, that they have centralized all the data. Now I have understood that Ed said you are also engaged in standardization forums, and that you're also engaged in making things interoperable. But I have the suspicion that this could be some sort of a fig leaf, maybe. Because what an actual metaverse, which is useful for all the different universes there are right now, would be that it is encompassing all the other universes, including Meta, for example. But I have as I said, a suspicion that maybe Meta is trying to be that metaverse for all the other different universes there are already right now. I mean, it's just, like a thought that just came to my mind. So I would.
Well, perhaps you could elaborate by explaining what has given rise to that suspicion in your mind.
Because there is a lot of data in Facebook and in Meta, but especially in Facebook, of course. And I think that's also like your unique selling point, that everybody knows that's how Meta and Facebook is making money, is because of the data that you have. And I can assume, which is also very reasonable, that you would be protecting those data and not sharing it a lot, I can imagine.
Well, we certainly shouldn't be sharing the data, and we don't share the data. And I can only repeat what I've already said, and Mark has said this many times. What we want to see is an open and interoperable metaverse. That's why we were one of the founding 40 organizations behind the Metaverse Standards Forum. To give you a further illustration of our open source approach, for example, when we wrote the Move language that was going to power the DM blockchain, we made it open source from the outset. It is now being used by a number of other DAOs who are seeking to build payment rails, and we're very happy that it gets that sort of use. Some of the technology we're building, for example, in the headsets, will have use outside of, simple gaming environments or other metaverse environments. And to give you an illustration, for example, the relatively high-profile recent separation of the Brazilian conjoined twins that was publicized in August, but actually took place in June, was prepared entirely by 2 months of rehearsal in a metaverse that was built using our headsets to help the surgeons train and prepare for that particular piece of surgery. So we're frankly involved in a lot of activities that help support a variety of other activities, including providing opportunities for creators to come into our world. But let me just be very, very clear with you. Nothing would make us happier than for creators to come into and build a world in Horizon Worlds that would enable them and their clients to take their assets from our world to other worlds without any friction or other issue. That for us would be the absolute success of the metaverse. The metaverse is not ours. We're merely assisting others to help build their bit. We're doing our bit, and we're providing some interfaces to facilitate others in what they're doing to help create it.
I think you've kind of hit the nail on the head there, Alexander, and I suspect, I mean, you've kind of touched on a lot of what we've talked about. I think that probably a lot of people on the panel would like to weigh in. I'd like to offer Heather a chance first, and then maybe both of the Davids on my left.
Thank you. I think you bring up a good point. You have a number of gaming closed meta systems, right? And how do you create the interoperability between them? Where I sit in my daily life is the conduit between policy and the actual where the rubber meets the road, building the technology. And so what I'm working on now and actually deploying is whether you want to call it a park pass, a carnival of verifiable credentials, we have a number of names, but it's that ability to allow a participant to move from one metaverse, primarily right now in gaming, to another gaming metaverse, to another gaming metaverse. And how do you make that happen with the technology? One, it's through the open source components that are needed to exchange that identity or that verifiable credential to let you in to the variety of closed meta systems, right, and the closed metaverses. But it's also the governance. Just because someone can enter one metaverse, do you want them in your metaverse? For instance, age restriction is a very crucial point on who you want to allow into your game. And so we work on not only how do you exchange and verify the credential between the various metaverses, but how do you deploy governance so the metaverses have their own sovereignty in deciding who they will let in and who they do not for regulatory reasons many times, and how do you deploy that so each of the metaverses can make their own decision that supports the regulation they sit in. But now I'm going to take the gaming for your team that focuses on gaming and say, what we're working on right now, and there are deployments that have occurred, it's not just moving from metaverse for gaming purposes to another gaming metaverse to another gaming metaverse. It's actually connecting other industries to that game. For instance, credit unions, banks, travel, airlines, restaurants. And so how do you start connecting the identity between the person who has a plane ticket and the person that same person, it's their bank account, and they're also going into that gaming metaverse because they want to connect all the experiences together. And so that is where you see it right now maybe as separate individual metaverses, but as we go through right now, they're actually starting to become fluid. And we can talk later about how that is going on. And I'm going to take it one step further. Not only are they becoming fluid between the gamers, it's becoming fluid between the rest of the individual's world as well.
Thank you, Heather. David Treat, and then David Schreier.
Yeah. I'm trying to see what I'm going to add. I agree with both of the responses wholeheartedly. We have an interesting historical reference point, right? AOL tried to define the internet as something that you go to through them, right? And they made a lot of money and wildly successful for a moment in time. But of course, you know, that it was an artificial constraint on our digital world. We will absolutely get to the same outcome that we did in that motion, which is, you know, ultimately what we're going to have is metaverse place builders, and the way we're using the word metaverse is grammatically the way we use the word internet. Accenture has their internet site. We have our internet place, we have our metaverse places that we're building. From a base technical perspective that leads into the operating model, I think we're absolutely headed to a point where we're gonna have a modernization of the concept of a URL that will resolve dependent upon the device which you're using to access the content. So we will have, on flat planes of glass, more and more immersive experience that can be delivered through flat planes of glass. There's lots of innovation in that space. Or if you are, lucky enough to have, a headset like, we have the world's largest metaverse place right now, I believe, in a corporate. We bought 60,000 headsets. And we were facing a very specific challenge of hiring 150,000 people during COVID that had never sat face to face with another Accenture person or visited an Accenture office. And how do you build, how do you actually effectively onboard them, train them, develop community, culture, et cetera? And so we built a set of metaverse places for our talent experience. And we have 60,000 headset enabled users and 150,000, another 90,000 who've gone through it in a two-dimensional perspective. But, the whole notion is we will all start to build our digital presence and places, and it'll be resolvable to the device that we're using. So, and we have to, have those standards and that flexibility, and that will break down the walls and enable everything that, both of the previous speakers and, well articulated around that portability, that movement, that ability to bring your identity, money, and objects from place to place, in those experiences. So I think it's super important we keep that in mind, and look past, I think, the necessary stage that we're in right now of the walled gardens that have grown up, because that's all we have available until we can get to those standards-based conversations. And then to the I think the first part of your question, why is blockchain necessary? In order to enable, there are two fundamental choices. Either you have to embrace the agency model we're in today, and there's one Uber organization that will control all of it, which nobody wants, or you have to be able to have these independent anchor points for the identity, money, and object tokens in order to facilitate being able to move from place to place to place. The governance and control and services associated with that, again, that's all why the wallet infrastructure, standards and basis is super important. But I think we're getting to this point where we're going to be building a variety of different places to different characteristics, standards, needs, and requirements against different social expectations, laws, and regulations. The Accenture Metaverse board room will not be accessible to anybody. The Accenture Metaverse front door lobby to read any of our thought leadership, everybody. And those will have different rules, and they'll have different access points, and they'll resolve to whatever device you have on you.
Yeah. So you raise a critical point, which I think is reflective of where we are in the stage of adoption of metaverse. So let's look at what's past is future. Back in the day, everyone knew that the way to sell software was with a license. And then someone came along and said, hey, why don't we make this software something that everyone can contribute to, and we'll make money a different way. We'll make money off of services and other support around this open source. And even to this day, a couple of decades after the open source revolution, in 2022, I still have lawyers who insist on putting provisions into contracts that say, attest that there is no open source code in the software that you're working on. It's staggering. There's resistance even today to this open source movement, which has been around for a while. What you're seeing with metaverse as another sort of transformational technology, we are only at the very beginning of that adoption curve where people are having a lot of discomfort around, is it open, is it closed? How does the data flow from one metaverse to another? But it's very exciting because we have an opportunity to shape that future direction that it takes, informed by our knowledge of how other technology revolution has been adopted in the past. So I think it's very exciting. And just to close out on the question of blockchain, it's very simple. Managing all that data flow across metaverses is going to be very complicated, and blockchain helps automate it.
Thanks, everyone. I think we're going to have to wrap up there. I mean, clearly we could speak about this for another couple of hours, but this was already a long session. thanks for those bearing with us at the start as well while we ironed out our technical difficulties. But, I just want to offer a couple of closing reflections and attempt to synthesize what we've heard today. I mean, this is really the first time that we've explicitly covered Web3 and metaverse ecosystems through the market governance lens here at the OECD. So I think it was a really valuable introduction and conversation starter between the public sector and the private sector and our policy community. And it's obviously shone a real light on some significant upcoming innovations that are probably going to form some part of our future digital life, right? So because we're at an early stage of opportunity, we have an opportunity to shape what that looks like that we never had with the internet, which has given us a bit of an imperfect digital world, shall we say. But what we heard is, to Millie's point, there are a spectrum of decentralization here, and can be completely automated and no evident hands on the controls to something which is decentralized in name only. So we have to recognize that in our approaches. We can't stop people, to Akira's point, who want to build truly decentralized systems that are difficult to instill some of the basic market integrity and protections that we expect in them. So what that kind of means is that the alternative, which is something that is decentralized, but perhaps there's a level of intervention capable, that there are some centralized authorities involved, that needs to be an open environment. There can't be lock-in, either for consumers or for businesses. It needs to compete on a level playing field, and that means it's competing on trust, on safety, and I would say on legal certainty as well, actually. So what does that look like? Well, from our conversation today, there are obviously sectoral standards and protocols that are underway in the industry, and we need to make sure that those enjoy support and are collaborative and are open standards. We also heard about the need for agile regulation and for tailored rules sometimes, but I think technological neutrality or technological agnosticism is also, a fairly important rule, but one that might change as well. I mean, we need regulation and policy approaches to shift with markets as well. But these things need to be people-focused as well. And I think at the start, that's a guide, a overarching level of guidance. And it needs to be, really 100% multi-stakeholder, right? There needs to be engagement and collaboration between all of the actors in this space. Otherwise we won't have that level playing field that is so important. So, this is really an important consideration as the OECD accelerates our work implementing our new blockchain policy standard, because this instrument really, it's intended as a tool to answer some of these questions, to support policymakers and entrepreneurs as well, actually to work through some of the issues that we've covered today. So I want to thank our speakers for their excellent contributions. Thank you, David Treat, David Schreier, Ed Bowles, Valerie Vasquel, Heather Dahl, thank you, Millie Perry, Kira Nisaki, and Rihanna Schwinger-Ladak as well. Thanks all for joining us. Your support for this event and for this policy work at the OECD is greatly appreciated, and I hope that we have the opportunity to welcome all of you back to a future edition of the Blockchain Policy Forum. One maybe in the metaverse next time. We'll see.
Thanks, Ollie.